It's the busiest week on the earnings calendar, and Toby and I have been sifting through all of the reports so you don't have to.
The first company I want to highlight is Uber. Uber is finally profitable. It reported net income of $394 million last quarter. That's compared to a net loss of $2.6 billion this same quarter last year. So Uber CEO Dara Khosrowshahi, I practiced that, also pointed out that it reported free cash flow of over $1 billion in its first operating profit ever. And here's the kicker. The days of Uber incinerating cash seem to be over. They expect to be profitable every quarter going forward. Who knows if that will actually be true, but despite this rosy guidance, shares actually fell around 5% yesterday because it missed on overall revenue. But Neal, I think that kind of rounding error will be forgotten in the long run now that Uber's entering its profitable era.
Yeah, I mean, it only lost $31.5 billion since 2014. Not a big deal.
Crazy. They incinerate cash more than any other company out there.
It is funny because I remember, when I first joined Morning Brew in 2017, Uber, Travis Kalanick, the founder, was the main story about how they were in such high growth mode, spending millions or billions really to go into various markets and get market share, and kind of like eschew regulations and any notion that they would ever be profitable. They got Dara in 2017, who was seen as the adult in the room who's led companies before, and they were like, okay, eventually you got to get this to be profitable. And 6 years later, here we are. So this is really something that investors and the market watchers have been watching for so long.
Yeah.
And it's finally here. I don't know what to do with it.
I know. It feels weird to talk about Uber in terms of being a profitable company. But yeah, mobility gross bookings were up. Delivery gross bookings were up 25% and 12% respectively. So Uber's just kind of flying
Uber's
now.
doing really well.
Yeah.
All right, moving on. We've talked a lot about the companies that have gotten crushed from COVID going away, but I can't think of any better example of this than the maker of the COVID vaccine itself, Pfizer. Pfizer basically vaccinated its way out of billions of dollars in sales, and unfortunately getting jabbed can't be turned into a subscription business. So the pharma company reported quarterly revenue that declined 54% from last quarter due to a slowdown in its COVID business. Vaccine sales are expected to fall 64% from 2022, while sales of its treatment, Paxlovid, are expected to drop 58%. Shares are down about 30% this year. Its CEO says this was expected and that they've built their plans for the post-COVID crisis era, and that era begins now. Pfizer's got a pipeline of 19 new drugs that it plans to submit for regulatory approval, including one for the hair loss condition alopecia and one for a common respiratory virus. Toby, always got to be thinking one step ahead of the pharma biz.
I know. It's watching Pfizer's quarterly revenue chart is hilarious because it just absolutely has this massive spike to almost $30 billion, which is just insane. And now it's kind of come back to earth in like the $12 billion range. Yeah, I guess you live by the jab, die by the jab a little bit.
Well, they're trying not to. And here's the thing. I looked if they have, what could be their savior. I looked if they have an Ozempic rival.
I know, yeah.
And it doesn't seem like they're at the level of Novo Nordisk or Eli Lilly. They scrapped an obesity pill, a once-a-day obesity pill that was in development a few months ago. They still have a few others in the pipeline because everyone does. Yeah. And the CEO was like, it could be a $10 billion a year business, but they seem like they're far behind in the obesity pill race, which is really the next kind of COVID vaccine. And I said COVID vaccine is not a subscription business, but this pill, this Ozempic rival, is because you have to take it every day and you can't stop.
It's an interesting state of the pharma market right now because, for so long it was just dominated by COVID, and now they're entering the Ozempic era, I guess. All right, for our next earnings wrap-up, we're checking in on Molson Coors, who just had its single biggest revenue quarter ever. The brewer of beers like Miller and Coors Light has been picking up customers left and right as people continue to shift their allegiance away from Anheuser-Busch in the wake of the Dylan Mulvaney controversy. The combined sales of Miller's and Coors Light outsold Bud Light by 50% last quarter, and even outsold Modelo Especial, which is the new #1 beer in America, by 30%. Neal, we all knew that other beer brands were going to benefit from the Bud Light exodus, but it is kind of crazy to see just how far-reaching this negative sentiment towards the brand is and who is benefiting them.
Right. No one expects this to happen in the beer industry because beer drinkers are loyal, and so they'll just go to their brand. So everyone, I think think CEOs in the beer industry are like, look, we can maybe improve or decline on the margins here, but we're not going to see wholesale changes. And in my notes here, I wrote in the lead-in, I wrote LOL quote. This is from the CEO. He goes, "We didn't plan on our largest competitor's largest brand declining volume by nearly 30% during the quarter."
Yeah.
So this is like completely unheard of, where wholesale, people are like, I'm not drinking this brand anymore that I've been loyal to for decades. And you're seeing it really filter significantly throughout the entire industry.
I know, it's crazy. Bud Light sales have been falling by more than 20% every single week compared to the same week last year since April. It's just a truly absurd drop off. And we talked about it, that beer is a relatively replaceable product.
Yeah, it's just brand.
And so people just are moving laterally into Miller in Coors Light.
I don't like Heineken, so I kind of want to beat up on them while we're on the subject of beer, but they said they had a really bad quarter because they raised prices too much.
Neal, don't.
Heineken
He's not a big Heineken guy.
Amstel is so much better if you're looking for that lager taste. Try Amstel. I want to see if people agree with me in the comments. All right, last I want to talk about Caterpillar, the heavy-duty machinery company whose bulldozers and backhoes you see on construction sites all over the world. I love looking at Caterpillar earnings because they make the things that make the things. If their sales are strong, it's a good sign for the global economy and vice versa. So how's it looking now? Real good. Shares shot to a record high after a strong earnings report. But I want to focus on 3 key tidbits that speak to larger themes we've been discussing on this podcast. One is demand for Caterpillar machines in the U.S. is huge thanks to the bipartisan infrastructure bill passed by Congress in 2021. Looks like we're actually repairing roads and bridges, not just in Philly, but across the country. Number 2, demand for its mining machinery is in overdrive as companies race to extract lithium and rare earth minerals that are used in electric cars. This is a key component to the EV supply chain, bits like literal minerals embedded in rocks, which is kind of wild to think about, that this is what we need for electric vehicles. And then finally is China. This is where the news gets less good. China is in a major economic slump, and Caterpillar said the vibes there are even worse than feared. Also, China not doing well is not a great sign for other countries because of its major trade linkages with everyone. But yeah, that's what I have for Cat.
I know. I do love Caterpillar earning calls because on the call, their CEO said that we now expect further weakness as the 10-ton and above excavator industry has declined, which is hilarious because you're right. Caterpillar is kind of like the canary in the coal mine for the global economy. If the canary was a 10-ton yellow excavator. So.
I think the reason I like it is because I just want to drive one of those.
I know. There's something just so primal about just getting behind like a backhoe or something. I was interested to see how much China accounted for Caterpillar sales, though, because they kind of put that gloomy forecast out. It's only 5 to 10% of Caterpillar's overall sales, which is surprising for just the second largest economy in the world.
There's really those 2 yellow building machinery makers. There's the Japanese brand, and I'm blanking on it. It's like Kotaku or
I don't know.
Oh, I don't know. I guess I was deep in the machine.
Yeah, I was going to default to you on that one.
Well, yeah, there's Caterpillar, which is the American one. Then there's the Japanese one, which starts with a K, and I can look it up later in the show. But
perfect. If anyone wants to send us Neal and I one to just take around New York, we'd love that. Hey, thanks for watching. And if you want more Morning Brew Daily, make sure to hit that subscribe button. And also check out the rest of our episodes wherever you get your podcasts.
New episodes drop at 7 a.m. Eastern, Monday through Friday. And you can email us at morningbrewdaily@morningbrew.com.